All right, all right. Hello, everybody. Welcome to my YouTube live on a Saturday afternoon. At least for everybody except maybe people in Pacific time zone in Hawaii. So it's 12 o'clock here in Arizona, um, which is currently on the Mountain time zone. And so thanks for tuning in. We're going to get started here in a second. Okay. Just going to give people an opportunity to join. All right, all right, all right. Let's get this show on the road, shall we? If you have any questions, please put them into the chat. All right. So if any questions that are in the chat, we'll try to get through all of them. If we can't get through all of them, we'll try to respond to as many as we can after the broadcast. However, just wanted to kind of talk about a few things real quick, and then we'll get into any questions you guys might have. So again, feel free to throw those into the chat. All right, so here's what we're looking at. All right, today we're going to talk about compound interest. Compound interest is a pretty cool topic. It's a phenomenal way to invest and to grow money. It basically is the theory of why you want to invest in something that is going to give you an annual return, monthly return, whatever kind of time period of return that it's going to give you, because it helps your money to grow exponentially. Okay, that's the biggest thing about compound interest. It's so phenomenal. The theory of compound interest is just amazing. Okay, and people want to um, do this more and more and take more heed to it because there's a lot of people in the country that are living paycheck to paycheck. This is one of my passions of mine, is to hopefully produce more financial literacy out there in the world, and to help educate people on ways to grow their money in a efficient, safe, whatever kind of manner you want to grow it in. Okay, everybody has a risk appetite, so there's a bunch of different ways you could do this. But ultimately, today I want to just talk about the theory of growing your money, and then you can kind of decide which direction you want to go. There's so many different ways you can grow money and to invest into to develop yourself. Okay, so first thing I want to talk about right now is if you were to just do this. Okay, I'm just going to give you a simple example and explain to you how your money can grow. Okay, so let's say you have $1,000 that you put into the stock market, a savings account, whatever. If you could find a savings account that's paying you much of anything right now, this isn't like the 80s where savings accounts were paying like 10 to 15% interest. So the stock market is probably going to be your best bet if you want to do something where you don't have to be too engaged or too involved. But let's say you put $1,000 into some vehicle. Okay, your choice as to what it is. You know, let's say you don't put anything else into this account. You create an account, put $1,000 into it. You don't put anything else into it for 30 years. And let's say over that 30-year time period, you're averaging a 10% annual return. Okay, which lately that's fairly conservative because the market has been going up on average 10% each year. Okay, so if we do that and we compound that monthly, it results in you having $20,000. That's correct, $20,000 at the end of that 30-year time period. And that's just with $1,000, just sitting there growing. You never touch it again. Okay. Now let's multiply that. All right. Actually, before I do that, let me just say, because there's some skeptics out there that will say 10% is probably too high. All right. Let's go with the more accepted percentage annual increase, just for the sake of argument. All right. Let's say 7%. Okay. It still grows to $8,000. So that $1,000 has grown 8 times. Okay. Difference between 7% and 10% is instead of it growing 19 times, it has grown 8 times. Okay. That's the difference. That's how much of a percentage point can change how much you're earning on it on a recurring basis. Okay. So you want to always have um, that be something where you are deciding how you're investing your money and what type of return it's giving you. You want to pay attention to that. But let's do another scenario. Okay. So let's say you start with $1,000, and let's say each month you add $50 to it. Fairly easy to do for most people. I mean, even people that are living paycheck to paycheck can probably save themselves $50 a month after they do an initial investment of $1,000. Okay, so I feel like this scenario is fairly something that's pretty much anybody can do. Okay, so, and we're doing the same time period. We're going to do 30 years, same time period, and we're going to leave it at 7%. Let's just use 7%. Okay. Now, remember, not putting another dime in, it was only $8,000 that you're going to have at the end of 30 years. Okay. But now putting $50 a month into the same account, all right, and just letting it continue to grow and compound each month, that turns into a whopping $69,000. Okay. And your total contributions that you made to this plan or to this account is only $19,000. Okay, so over that time period, you've only contributed $19,000, which over a 30-year time period, I would hope that we can at least save $19,000 to where, hey, you got yourself $69,000 in an account that you can use for whatever you want to use. This is the power of compounding interest. Okay. Now, these are just basic dollar amounts that I'm using right here. Okay. Basic dollar amounts. Let's say you want to become a millionaire. Okay. Let's say that's your goal. You want to be a millionaire, just $1 million. All right. Now, some could say that a million is not exactly what it used to be. I would agree with that to a certain extent, but a million is still a lot of money for a lot of people. And a lot of people could actually live and retire if they had $1 million in their account with their lifestyle that they and how they decide to live. Okay, so we're not going to balk at $1 million. All right, so let's say you want to get to $1 million. Well, it may not be quite that difficult to get there. Let's just assume so the IRA level is $6,000 a year. So let's assume you do $6,000 a year every year for 30 years. Okay, let's just see what that ends up being. And again, this is just at a 7% rate of return. Okay. So if we do $6,000 a year every year for 30 years, you're a multimillionaire. Surprise, surprise. That's $7 million. Okay. $7 million just by putting away $6,000 a year, which is the current IRA investment cap limit, into a retirement account or some other investment vehicle. You'll have $7 million when it's all said and done. Okay. Let's reduce that because maybe $6,000 is too much for some people. Maybe you just want to get to a million. So let's maybe try 2,000. Let's see what that does with 2,000. 2,000 over 30 years at 7% annual return is still 2.5 million or 2.4 million. I'll round down. 2.4 million. Okay, that you're going to have saved over that 30-year time period. People, if if we can't save $2,000 a year for 30 years, we got to change something with our lifestyle. That's my encouragement to you today. Don't go get that coffee. Don't go and spend money on a brand new car when you have a car that works just fine. Don't go on that trip. Put a couple $1,000s into some type of savings vehicle each year. If you do that, okay, you're gonna have a lot of money. All right. So, anyways, these are some things that I just wanted to kind of say and encourage people to do because if you do these things, you can have a lot of money when it's all said and done. All right, that was the topic for today. So now that we're done with that Q&A, what kind of questions do you guys have? Feel free to leave those in the chat here. If we don't get any questions, then I guess we'll end this a little early. But hopefully there's a few questions that come through to us so we can like get you guys to where you want to be with your life. Okay. Let's see. Anything. No questions so far. No questions so far. So, um, I don't know. Does anybody want to see a scenario? How much money they would have if I give you a certain scenario? Feel free to throw that in the chat too. We can do that calculation for you and make sure that, and so you can kind of see where you would be at if you invested a certain amount of money into your account. You never know where you might be. So, dun, 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 dun. Going once, going twice. Sold to the highest bidder. No. Okay, so there's no other questions right now, so let's talk about something else. Now, if you were to take this these investments that we're talking about for the compounding interest and put these into a Roth IRA. Okay, so here's the next word of encouragement. Um, a lot of people are timid about Roth IRAs. Okay, and what makes sense for them. Um, okay, let's see. Daryl said an example would be great. What example do you have, Daryl? Feel free to give me some numbers on what you think maybe a friend of yours can afford, you can afford, your family can afford, and I'll break those down for you and tell you how much you would have over a certain time period. So basically, I need to know your initial investment, your monthly contribution, the time period that you want to do this over, and we'll go ahead and give you those numbers. So three numbers I need from you: initial investment, monthly contribution, and time period. Okay. If you can kind of give me that, I'll give you that example. So, Roth IRAs. The great thing about Roth IRAs is they have the ability to grow exponentially and grow tax free. Okay. That's super, super powerful. What I like to encourage people to think about Roth IRAs as is it's a glorified savings account. Okay. The reason I say that is you can always pull out your contributions from to a Roth IRA any point in time, tax and penalty free. You just have to leave the profits in there, which should be totally fine. I mean, you should be okay leaving your profits inside your retirement account. You need a retirement account. You need to be saving for your future. So you don't want to ever pull everything out that you have saved. I mean, if there's some drastic circumstance where you just dire need, got some big medical bills or whatever that you got to pull out, that I understand. Okay, but that's few and far between. Most people can go without making a massive withdrawal from their retirement account. And so using it as a savings account is good. Have maybe 1 or 2 months in a regular savings account for like emergency cash needs when you might need something just really urgently. Okay. But then put all your extra cash and stuff that you need into, I shouldn't say all, up to the threshold that you can, $6,000 max right now. If you're under 50, if you're over 50, 7,000. So put as much as you can into that Roth IRA each year and just let it grow. Okay. And if you ever need it at some point in the future, you can always pull it out. Okay. So, for example, so let's say we got $2,000 going. Let's just say we'll go back to the $6,000 example. Let's say instead of 6,000, you only put 3,000 in the first year. Okay. And let's say you do that same 3,000 every month. Okay. All right. And let's say it's over 30 years. Let's say you get a 10% return. Actually, let's say it's over 20 years, just so we can kind of, because some people are starting late. So some people are not quite there yet. So let's say it's over 20 years. And let's go ahead and calculate that and see where we'd be. All right. We'd be at $211,000 by doing that over 20 years. Okay. Your total contributions were $63,000 over that time period, and it grew to $212,000 basically. Okay, so that's a way to do that. And I do need to correct something from earlier. I apologize. I input these numbers in here incorrectly the the first time when we were talking, so I do need to correct that. That's my bad. This is one of the things when you do live videos. This is some of the stuff that happens, right? So I actually did that incorrectly. 200. I accidentally put in the yearly contribution as the monthly contribution. So some of those numbers I gave you earlier were a little inflated, but these numbers are correct here. So 3,000 a year with $250 going in every month, which is basically 3,000, would result in $211,000 after 20 years. All right, we got a question here from Raquel. I have a traditional IRA and a savings account. Should I also get a Roth IRA to have more savings retirement account? Absolutely. That's a phenomenal question. And absolutely, highly, highly encourage you to get a Roth IRA. Now, you have to keep in mind there is a threshold and income limit on contributing directly to a Roth IRA. Okay. So you can't just directly go into the Roth IRA. You have to also think about your income limit and determine if you are able to do that. That said, if you are over the income limit, voila, la, there's a way to get in there anyways by doing a backdoor Roth IRA contribution. Okay. Now, one of the things you might want to do is if you have a traditional IRA, one of the things you may want to consider doing is actually converting that traditional IRA to a Roth IRA. It depends on how much you have. Feel free to contact me. We can set up a consultation. I can kind of give you some thoughts or perspectives on maybe some things to do. But ultimately, if you have a traditional IRA right now, you may want to convert that to a Roth IRA and let that thing grow and multiply and grow tax free. Okay, so I just gave you these numbers. I said, okay, $3,000 a year going into a Roth IRA, you're going to have $212,000 at the end of 20 years. Guess what? You only put in $63,000. So that's basically, just make sure my math is right, $149,000 in profit from your investing that is 100% tax free. No taxes, not putting a dime into it. Okay. All right. Government gets nothing from you, nothing from you. All right. They get some on the front end on that initial $63,000 that you're putting in. You're paying taxes on that. Yes. But I would much rather pay taxes on the 63,000 than the 149,000. Okay. Much rather do that. And if you invest this stuff in, awesome investments and you grow it even higher than 10% per year, your earnings are going to be exponential. Okay. So yes, I highly encourage people to use a Roth IRA more than a traditional IRA. I just feel like it's the best option for most people. All right. Especially if you're lower income, middle income, the Roth IRA is phenomenal investment vehicle for you to save money on taxes. Okay. It's a bit of delayed gratification. You're paying taxes now, but when you're in retirement, when it really matters, not having to pay taxes on all that profit, you'll thank me later. I look forward to your thank you in about 20 years or 30 years whenever you retire. Okay. We got a comment or a question, it looks like, from Daryl Johnson. Is it too late? I don't know what you mean by is it too late? Too late to get into a retirement account, a Roth IRA, etc.? No. As long as you're not over 72 years old, you can still contribute to a Roth IRA. Okay. So yeah, no, there's not any, it's never too late. Now that said, if you are at retirement age, okay, it may not make sense to do a Roth IRA if you only got like 5 or 10 years of growth, because you're not going to have that much growth. So you have to kind of gauge where you are in your cycle. If you're looking to retire in like 10 years or less, maybe a Roth IRA doesn't make the best of sense, but you can still do it. It might make the most sense if you can grow it exponentially. So if you have an ideal to invest and you can grow at 20 or 30% annual returns, like cryptocurrency, I don't know, as an example, as a possibility, then hey, maybe you do want that Roth IRA for that. So you have to kind of just gauge based on where you are in your cycle and what you're planning to do with the funds on what you want to do there. Okay. Let's see. Any other questions? Hopefully that answered your question, Daryl. If not, feel free to chime back in. Okay, so I do want to go back and correct my initial examples so I can make sure I'm being truthful with you guys. I apologize for that oversight. So we're going to take $1,000, divide that by 12. That's a monthly contribution of $83. So if you do $1,000 and then you do $83 per month, okay, over 30 years at a 10% return, that results in $207,000, okay, from that investment. All right. And so, yeah, so there's a calculator. What I would tell you guys is investor.gov. Investor.gov. I'm going to put this in the comments here. Investor.gov has a compound interest calculator this should become your friend. You should always want to do some. I'm on here probably once or twice a week, playing around with some kind of numbers, goofing around, just thinking, oh, what could I, how much would I have in 10 years if I was earning 30% annual returns and I put $5,000 away per year? And I did $1,000 a month or whatever the case might be. Okay. I'm always playing around and doing hypothetical situations. So I definitely encourage you to do the same thing. Think about what you might have. Think about what you want to do, where you want to go, have a goal. Have a goal in mind. Where you want to get to. I want to get to $1 million. I want to get to $2 million. Maybe it's lower. Maybe it's only $300,000. Maybe it's $500,000. You have to gauge based on your lifestyle where you want to get to, and then work backwards and say, okay, how much time do I have left? All right, I got 10 years. I want to get to $500,000, and I currently have 100,000 invested. How do I get there? Okay, and play around with the numbers and figure out, okay, how much more do I need to put in? What types of things do I need to invest in? What type of return do I need to target? And that will help you to determine where you want to be. So, just some words of encouragement. All right. Well, looks like there's no other questions. Unless there's any other questions, I'll give you guys another minute or so if you have any other questions to chime on in, so we can try to get those answered for you. If there's no other questions, though, we'll go ahead and end this YouTube live and let you guys get back with your Saturday. Let's see. And I'm going to also throw in our link to schedule consultations with me. Now, I will say that obviously the consultations do charge. I mean, there's a fee for it. But, if you are looking to grow and develop and get some tax tips and ideas, I would say most people do not leave a consultation with me without saving themselves thousands of dollars in taxes, one way or the other. Whether it's today or in the future, you're going to be saving thousands of dollars in taxes by having a consultation with me. I have not had a single person go through the consultation that said this is a waste of my time and money. Okay, so just kind of keep that in mind. Sometimes you have to, be willing to pay for services, and especially if someone's going to be saving you money. So we'll throw that consultation in there. And one of the things I do, by the way, is I do provide a credit for a consultation, initial consultation, if you come back and have us do services for you, whether it's tax returns or bookkeeping, that kind of stuff, some type of accounting. I will definitely throw in, a credit for that consultation towards those services. Okay. One other thing I want to touch on before we end this this is not a podcast, this is a YouTube video. Before we end the video, I want to touch on my event. We have 2 events coming up. Okay. Hopefully you can see that. If not, I'll go ahead and break it down for you as well. But we got 2 events coming up. One on February 25th from 9 to 1 p.m., 9 a.m. to 1 p.m. Okay. This event will talk about small business taxes in general and ways that you can save yourself money on taxes. Perfect event for doctors, lawyers, dentists, real estate agents, other people who make a lot of money on a 1099 basis, and they're paying a tons of taxes every year. Most of those people in those professions are notorious for doing this because they don't have the business set up the right way. If you are paying a lot in taxes and you're in one of those professions, you probably want to schedule a consultation with me and give us a call, because we could probably save you thousands, if not multiple thousands of dollars in taxes. There's some people that I've saved hundreds of thousands of dollars in taxes because their previous person was not giving them the best advice. Okay. So highly encourage most business owners to attend that workshop. The other workshops for real estate investors and real estate operational people, okay, whether it's earned income from real estate or passive income from real estate, either one, we want you to attend this new workshop. This is brand new. This is the first time I've done this workshop for real estate investors, but it's just something that I believe really passionate about, that we need more people investing in real estate. And so I wanted to do a workshop for real estate investors, March 4th, from 9 a.m. to 1 p.m. Both of these are happening both live and virtual. So whichever way you want to attend, live or virtual, just sign up for the event. If you want to attend virtually, we'll give you a link where you can attend virtually once you go ahead and register. and we'll make sure we take care of you and you get the information that you need, because that's going to be super powerful. All right. There's so many ways you can invest in real estate and not pay a dime in taxes, like goose eggs, like nothing. And in fact, it might reduce your taxes from your ordinary income depending on how you structure it and if you do things the right way. So I'm going to tell you some of those thoughts and perspectives and ways you can do that. Okay. And I'm pretty sure that you're going to learn something in this workshop on real estate that you haven't heard from your current accountant or CPA. Pretty sure. Because for some reason, some of these people out there just don't know what they're talking about. That's all I'm going to say. All right. Check out my podcast as well, the CPA Huddle. Check that out on Apple, Spotify, whatever you guys are at. I do that with my good buddy, Eric Pierre, CPA. So check us out there. Awesome podcast by two Black CPAs, especially being Black History Month and all that great stuff. And last thing I'll say for the events, if you sign up by tomorrow night, Sunday at midnight, using the code Black History Month, okay? So you're going to go to this link right here and type in Black History Month, okay? All caps. And you will save yourself $50 on your registration for the workshop. The workshop is $200. That's the price for the tickets, okay? It includes lunch, a light breakfast, networking time, all that great stuff if you're in person, okay? If you're virtual, obviously, it doesn't include that, but you're still going to get a lot of valuable information. But if you're in person, it includes all that. And the ability to kind of network and talk to people, et cetera, during the breaks. So some thoughts to think about. It is tax deductible. If you have a business, this is absolutely tax deductible. Educating yourself on tax laws and ways to save money, tax deductible, 110% if you have a business. Okay. All right. Well, thanks everybody for tuning in. I don't see any other questions or comments, so we'll be back with you with another live within the next week here. Again, promoting our events, educating you at the same time. Hope everybody signs up for the event, and we can educate you some more. And thanks for tuning in. We'll be back with you some more later. Have a good one. Bye.